Morning. Who's alive? Who's alive? You guys ready? You 2 p.m., huh? Hope you're enjoying Ramadan. Friends and family and other loved ones. Really, Lucas? No kidding. Yeah. I was just telling my kids, yeah, in Canada, winter's from November 1st to May 1st. Boom! So let's get on with it. Welcome to Forex.Today. It is 8 o'clock in the morning. This is 90 minutes before the stock market opens in the United States of America. Today we're going to cover Forex. Things like euro, dollar, CAD, yen, USD. We can do commodities, gold, oil, Bitcoin, that kind of stuff. Whatever. Hey, if we can cover it, we will. Just ask questions. Jim says, talking about 3 to 6 inches of snow today. Really? Well, I saw we had a red sunrise. So most mornings, if not every morning, I watch the sunrise. And it was red. And I said, uh-oh, sailor's warning. You want to? Yeah, Rari's like, hey, how about some Doge? Well, my son over the weekend said, well, Dad, if you bought $10,000 worth of Doge coin, when it was worthless, we would have made millions. I'm like, yeah, think what you just said, son. If I bought $10,000 of something worthless, I'd be rich. No, I'd be poor. So anyways, I will do my best to cover whatever you want me to cover. Just please type it in the chat. Just remember to treat everyone in the chat with dignity and respect. 3, 2, 1, hit it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but cheer up! Stay small, stay humble, focus on the long run. Never risk money you cannot afford to lose. So, guten Morgen. Roderick says, hey, FX Bootcamp video is really helping me with my whole trading plan. Thank you. That's what we do. That's what we do. So I'm glad it's helping. Really cool. Okay. Robin says, you did say yesterday to front run pound dollar. Yeah. All right, cool. Hope it's working out. I was in it and missed it, so it's one of those ones. Just got to move on to the next trade. So my name is Wayne McDonald. I'm a trader just like you. This is what I do. This is what I've been doing for a very long time. Before this, I invested into private startups. Before that, I was a businessman. Spent several years in the nonprofit world. So that's what I do. My first real paycheck came from NASA when I worked at NASA. But really, I've been working my whole entire life. So probably my real under the table paycheck probably was when I was 11 or 12. So anyways, Forex is the best thing I've ever seen. Even though I've read certainly hundreds, maybe 1,000 business plans, Forex is by far the best business I've ever seen. Things like you don't have to waste money on inventory or customer service. You don't have to waste money on accounts receivable, accounts payable. Man, it's such a great business. So if you get it right, it pays you too much. Love it. Okay, cool. That's it. So all you have to do is understand technical analysis, fundamental analysis, global politics, global finance, the flow of money around the world. Yeah, it's a real gig, right? So if you don't know much, it's not going to work well very long. So you need to look at Forex truly like you're going to college and getting a doctoral degree. And if you're willing to put in that kind of work, don't worry about it. The money takes care of itself. If you want to get rich quick, it ain't going to happen. Let me just cut to the chase. So, glad you're here. Ask questions, get involved, and I will do my best to help. I'd like to thank Traders Way for being part of our community as well. You're a trader, they're a broker. There's a symbiotic relationship there. Cool. You need a broker you trust. They need a client that doesn't blow up their trading account in a couple of months and goes away. The cost of acquisition is just too great to maintain a successful trading business if your traders keep showing up and going away. What they would rather have is a client that can trade day after day, month after month, year after year. And the only way to do that would be if the traders could actually be profitable. So they want you to be profitable. They want you to have skills. They want you to have education. They want you to have patience. They want you to have discipline. They don't want you to be over leveraged. They want you, that kind of stuff. So if you think about it, they want you to succeed. They need you to succeed so that they can succeed. That's what a symbiotic relationship is. So, hey, look what the Forex.Today do. So let's get you successful. Let's get you real skills that you can turn into a real business. Kevin says, hey, Traders Way spreads are better than other brokers you've used. Yeah, cool. And how about the swaps, Kevin? Have you compared swaps? I'd be shocked if you got better swaps than Traders Way. They're very, very generous. Very cool. Okay. Well, I guess is it generous? Is it generosity? No. Other brokers, what they do is they keep the spreads for themselves. The swap, they pay themselves a swap. In fact, very often a broker might keep the swap and charge you on top of that. So you earn negative swaps, which means instead of earning income, you're charged income. Oh, but you save 0.1 on the spread. It's so ridiculous, right? So anyways, you got to have a legitimate trading partner that you trust for your execution, and that would be Traders Way. Visit Traders Way, open up a demo, yo. All right. Cool. So here we are, dollar week, yen, right? Yen had some strength a little bit, and then weak again. Cool. So I want to focus on yens today. A pig topped out, which is fine. Aussie up and down, which is fine. Euro is just the anti-dollar, so that's doing what you would expect. Kitty cat coming off the top. wah, wah, wah. So we have a lot of mediocrity here. So the biggest sort of, if you look at maybe a rate of change, right? Then you'd probably want to look at yen. So I want to start with yens today, if you don't mind. Okay. Kevin says, back in the day, mortgage brokers used to keep the spreads. Yeah, well, here's another great example of why blockchain is definitely going to, be a technology that is used in our world. And it's things like even transferring money from, let's say, one country to another. A couple of things, they would charge you a lot of money for the privilege. You're like, dude, you just move it from there to there. It's a SWIFT. How much does the SWIFT cost you? Right? Oh, well, we're going to jack that up 900%. You're like, really? Do you really need to do that? And then the other thing, and I've transferred money around the world for a very long time. And when you change currencies, right? Just something simple like moving money from America to Canada, right? The banks, right, would just give you a horrific spread. Not like 5 pips, but like 500 pips. And you're like, what the hell? You're a bank, for crying out loud. You get even better than 5, right? It costs you 3 pips, 2 pips. Why would you charge me 500 pips if I'm a client? Like, I just never understood it. It's like, this sucks. I'm getting reamed by my own service providers, right? Well, those days are going away very, very quickly, and that has to do with blockchain. And by the way, why did it take 2 days plus the weekend, so maybe 5 days, to transfer money from a bank account in Canada to a bank account in the United States, for example? Like, why does it take that long? They're like, well, the banks are closed on the weekends. You're like, what? Seriously? Like, what do you do? Are you handing money physically from one human to another? Like, you don't have computers that do this? Like, it's so funny that they would do this. Well, of course, they're keeping the interest, right? And it was all built around screwing their clients. And when you get an industry like that, you want disruption. And so for blockchain to come in and you're like, hey, you want some money? Yeah, okay. Good. I just sent it. You should have it. And it pops up on your computer or your phone. Oh, yeah, I received it. It'll take a couple hours to clear, but yeah, I got it. And you're like, thank you. Good. And you're done. And what did it cost you? Significantly less money, right? So anyway, yeah, Jean-Guy's like, yeah, they pull it out of your account immediately, but it takes 3, 4, 5 days to get transferred. You're like, there's just no way, right? So anyway, we had an industry that screwed people over for decades, and now that's dead. So I love that kind of disruption. Love that. Excellent. Blockchain. Yeah. Boom. Boom. No settlement with XRP. Is that one of the major things, Peter? That's one of the major benefits of XRP? That's cool. I know you've told me that there's some major benefits and it was designed that way, but cool. So anyways, let's get into this. David says, do you feel that way about refunds? Do I owe you a refund? See, here's the thing. Everything at FX Bootcamp's automated. So when someone says, well, I signed up twice, I signed up 3 times, I don't know how to cancel, that kind of stuff. I'm like, dude, it's an automated system. So, I'm slow in those things where you're like, I need help. I signed up 3 times. I need a refund on these things. Dude, I don't sit around like that's not what I sit around and do all day. So yeah, very often, that's why it's automated. So when someone needs something outside the automated process, I'm like, dude, I'll try to get to it. Right. But I automate everything so that I don't have to do stuff like that. So So if I do owe you something like that, David, send me another email. I'll do it. Often you'll send me an email, and then 7 hours later, I'm back at my computer, and of course I have 400 more emails, and it just gets missed. Cool. David says, like, hey, I've been doing your relative strength exercise for the last month with 30 wins and no losses without doing any fundamentals. Well, yeah, but so David, that's where I started as a trader. I started that way. Right? Oh, okay. Well, then send me a wealth. If I give you a wealth of information, send me some wealth. We'll be even. That's where I started. And the reason I started there, and I mean like 20 years ago when I'm like, I need to figure this Forex thing out. I asked myself, and this is a normal part of like a business planning process. So if you think of me at that time as a sort of a business engineer, that's what I did for a living, right? I engineered businesses. So as a newbie coming into the financial markets, because I was never a stock trader, I wasn't like a flunked out options trader, a commodities dude that's now doing Forex. Like I started with Forex, right? So I had to ask myself, what is Forex? Like, what is it? What does it do? Because I need to understand it so I can figure it out. So to figure something else, you have to first start with, like, what is the purpose? What is the raison d'être? And I look at it, I'm like, oh, it's strong versus weak. That was my answer. Now, someone might have a different answer, but that was my understanding, so many decades ago, where I'm like, not just what is Forex, but like, how is someone successful in Forex might have been the answer. Like, not what it is. It's a transfer of payments, right? A transfer of payment system. Okay, but as a Forex trader, maybe I would have said, how can I be most successful? And I thought about it. And like, the most successful trade you could do is take the absolute weakest and pair it against the absolute strongest. Okay? It's like that, right? So anyways, and so I said, well, how do I figure that out? You see can you follow the logic there, David? So I'm like, well, how do I figure that out? So I went off on my own to figure out how to figure that out. I'm not trying to trade. I'm not studying technical analysis. I didn't know technical analysis. Most people, by the way, most people in the world didn't understand technical analysis. Even the idea of using a chart for professionals was almost ridiculous in many cases. So technical analysis wasn't my first go-to. It wasn't the thing I started with. Most people here start with technical analysis and they're like, well, my MACD or my RSI or my pivot points or my moving averages, whatever tool, it's going to tell me how to get filthy, stinking rich. It's not even the right thinking. It's not even the right process. It's not the right question. It's not the right focus, right? So in this case, where I started, because there wasn't an emphasis on technical analysis, because there almost wasn't even technical analysis. The first one is, what is the most successful trade you could possibly make in Forex? Strongest versus weakest. Okay, how do me personally, not how does a tool on my chart, how do I get an EA? Can I download a free indicator from somewhere? It wasn't anything like that. There wasn't even MetaTrader, right? There wasn't MT4. FXCM didn't have a charting package, right? So how do I figure that out was where I started. And it probably was good. That probably helped me because it changes the way I think. Nothing on my chart tells me what to do. Your customer says, but aren't these backward looking? Yes. Okay? Yes. And that's why I started then to complement that with technical analysis. But you're absolutely right, your customer. They are backward looking. They've only tell you what has happened, in this case, recently. What I looked at wasn't an indice like this. What I looked at was overnight volatility. And then I completed an Excel spreadsheet. And I went through this whole process. And as you guys know, most of you have heard the story 1,000 times. I would go through the process, probably take me an hour or more every morning. I'd have to manually fill it out. And from that, I would then make decisions. Remember, back then, I wasn't trying to really predict the future either, your customer. I mean, this is where I started, not where I am now. Price is always forward-looking. No, that's not true. Not really. But be careful. That sounds like somebody's sales pitch. But, right, it's not all backward-looking. It's not all forward-looking. But there are assumptions. But there are two different things that we need to look for. But anyway, so I would look at overnight volatility, and it was helpful much of the time, but not always, because the weather can change, right? It was beautiful the other day. Now it might snow. Really? So then I started to incorporate technical analysis. Now, again, follow my thought process. I didn't look at my indicators to tell me what to do. I already knew what I wanted to do. Okay? Because I did that first relative strength exercise. Then the second thing is I looked at my numbers, meaning the overnight prices and volatility stats. And I said, okay, what does the Wayne want to do? And I said, okay, I found myself an Aussie dollar. Aussie's the strongest, USD is the weakest. Okay, so I want to buy Aussie dollar. So then I started looking at things like, I need to know support and resistance. Okay? Right? And then I started realizing, well, what is support and resistance? Okay? What is support and resistance? And I studied that. Like, it sounds like a philosophical exercise, like, you know, you're sitting down with Buddha or Confucius or something, and they're like, so they let's say Buddha asks a question. Sorry if you're Buddhist. I'm not trying to belittle Buddha. But, okay, your mentor says to you, okay, you're a bull on Aussie dollar. What do you want to do? And you're like, okay, buy it, support, sell it, resistance. Okay, very nice. What is support? Okay. And so I thought about that, and I went off into the woods and I meditated. And I came back and I said, there's two types of support and resistance. There's one of the market, and then there's one of price. And, you know, and again, if you buy my book from 15 years ago now or whatever it is, you see like much of the book is separating market and price. Market, price. Market, there's the market, and then there's the price. And my whole sort of career has been trying to separate market from price, market and price. So if relative strength exercise told me the overnight market made Aussie dollar bullish, it didn't put me in a trade, then I had to use technical analysis to somehow get into a trade. So that there's price. There's the market. I did the calculation. The market is bullish. So now I had to say, now is the right time to buy based on price. So then, right, once I realized there's market and price, I started with moving averages. I need a combination of moving averages for market. I need a combination of moving averages for price. I'm going to need oscillators. I need an oscillator for market. I need an oscillator for price. Support and resistance, you know, there's a dynamic level of support and resistance, and that's moving averages. Okay, that's going to be price-based. Pivot points identify support and resistance, but not on price. It doesn't care what the price is right now. It's ignoring the price right now because it's looking at your pivot points are based on what happened earlier in the market. What was yesterday, what was yesterday's market like? If you define that as a market, you might define what happened last week as the market. Was the market last week bullish, bearish, neutral? Was it a changing market? Was it a continuing market? What was the market like in the past? And of course, you can use monthly and beyond, right? So there's that. There's market price. There's market support and resistance. There's price support and resistance, and there's a bunch of ways to measure where we are. Okay? Oscillators tell you overbought and oversold conditions. So if you're a bull, you only want to buy at support. Where's support? The second thing is you only want to buy at support when it's so oversold that there's no one left to sell it. And in fact, some profit taking takes place and it's turning bullish again right at support. And you're like, but I'm already a bull. While others are chasing the fact that price dropped, I was buying because price was very unlikely to drop further. In fact, has shown me technical analysis evidence of it no longer falling. And I said, well, that's what I'm looking for. A 5-8 cross up at support when there's no one left to sell. Maybe someone even buys it. And so my thought process, if you think about it, and I hope this is helpful, and then we can get into like technical analysis, the easy part, right? But if you're trying to develop like your process of learning, I'm trying to explain my process where I had a different situation where when I started, there were no charts. So I approached things differently. And then when charts were available, I saw it as a tool to help me execute my I don't know, dare I say, fundamental analysis. Okay. And then I said, well, that's interesting because one is strategic and one is tactical. And then I wrote a book called Strategic and Tactical Forex Trading. Okay. Cool. Hopefully that's helpful. Now, at the very least, you'll understand my point of view better, and maybe that will be helpful as well. All right, so let us get out of this. Ciao. Okay, so we already have a trade plan. Okay, this is based on range, price. Okay, price. This price, this price, this price, this price. Okay, that's a range, that's price based. And then we have a market. This is only based on what happened during, well, I guess I should do it this way. What happened during this period. And, right? And you'll say, well, Wayne, that's the same as resistance and support. Yes and no, because what it's doing is trying to predict the future, and it says, well, you lost the volatility you had here, okay, but it ended bullish, so it's still bullish, but we expect less in this period because of what actually happened in the last period. So it's all based on what happened during this market period. So it's like, well, because of last week, this is the future. Okay, so that's market. Now looking at it as price, I just say top, bottom, but fundamentally I'm bullish. So if it breaks out, then how will it do it? Well, it'll go from bottom to top, top to bottom forever and ever and ever, but eventually it's going to break and provide a pullback. Okay. Okay. And the rules of engagement here is it's going to move sideways forever. Forever and ever 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 until it breaks out. Well, if you're a bull, you think it'll break out to the upside. Okay? And you got your price, so this is low, this is high. You can throw oscillators in here to tell you whether it's overbought or oversold. That's fine too. But if you have the assumption now, which is again forward-looking, forward guidance, your prediction of the future will say Aussie yen will go up. There's a range where you can do it the way I drew it, or you can use pivot point theory, which is a market prediction, and you're like, this predicts that. Okay? Now you could say, you could probably measure from here to here and pop that from here to here and get a breakout, and you'll see it'll end up being about 87. This says probably about 87. All of this says about 87 with the assumption of bullishness. Okay? Can you see that? So I think as traders develop, they struggle with one of two things. One, there's no analysis. Analysis. Okay. Like, you don't do this type of work. You just don't do it. You're still have a childish trading and investing point of view. Like you don't do this, so therefore you really don't know what you're doing. You don't do anything close to this. So I have to open your eyes, open your mind. That might take a week. That might take 3, 4, 5 years. But at some point, you're going to have to be able to do some analysis. And then two, and probably from bad habits that you developed before you got to the ability to actually have a trade plan, you don't actually execute your trades properly. And of course, you gave yourself bad habits because you never had a trade plan to begin with, so you don't execute at the right time for the right reasons. And so now we have to go back, right? So now that you have a beautiful trade plan, we have to go back in history and break all your bad habits and train yourself actually how to trade. And very often you just keep falling back into these old habits because the old way, even though you know it fails, it's just easier to do it the old way. And you're like, well, I got such a good trade plan now, so I could trade poorly with a good trade plan, and it'll work itself out. But we all know it doesn't work itself out, right? So the real frustration is having to go back and break all the old habits. And that's our struggle. And by the way, it never goes away. Okay. Your bad trading habits is like alcoholism. It's not going to go away. No matter how good a trader you become, you'll still have those bad habits that you need to be worried about and actively not doing them. My wife and I were having a conversation similar to this, not about alcoholism, but like actively not doing something. Like that is actually a thing. You have to actively not trade poorly. You have to actively every single day prevent yourself from jumping in. Jumping in late, jumping in because you see something quick and you're like, right? You have to actively not suck. I will not lose a ton of money today. I will not blow up my trading account. Okay? You're actively not doing something. And then you have to go back to, well, then what will I do? I only trade my plans, and I plan all my trades. Okay? So, anyways, look, if you were a bull, did you buy here? Did you buy here? Did you buy here? That's it. That's how you swing trade, by the way. But nobody does it, right? Look, I've trained people in my swing trading group the exact time to be at the chart and the exact way to trade. And it's still difficult. And that's the hard part. It's the human side of trading. I suppose you could train a computer to do it, but then they're going to do something stupid when you're not looking at doing other things like, I don't know, so whatever. You still need to understand. You have to understand this even if you're going to train a computer, because now you have to train a computer how to do what apparently you can't do. Right? Hey, what's up, HK? Okay. Hey, so what's life like in Hong Kong? Am I able to visit? If I drop in Hong Kong, can we go out? Is there food? Can I go to restaurants? Can I go to cigar bars? I've already been to the top of the rock, so no need to do that again, which was really cool. Did that with Daniel. So I'm like 9 days away from being able to travel anywhere in the world. Oh! Yeah. You're in Bulgaria. Sofia's Bulgaria, isn't it? I'd like to go to Bulgaria as well, particularly on the Black Sea, but not this time of year, I don't think, right? Mm-hmm. Yeah. I heard the wine is actually one of the best deals in the world when it comes to wine is Bulgarian wine. And if I just said that and everyone's like, oh my God, what do you mean Bulgarian wine? ? Well, hey man, if it was half decent wine and no one's buying it because no one's even heard of it, then yeah, the price is probably right. But I heard summer on the Black Sea is beautiful in Bulgaria. So, anyways, there's how you swing trade. So if you bought it on Sunday, you're golden right now, and you're hoping it breaks. Okay? If you're not a swing trader, if you're more of a price trader, you're going to let it break and you're going to grab the pullback. Because remember, this is predicting the market. That's supposed to be an arrow. You can't quite see it. The green zone is predicting the market before it's happened. You're not even thinking about, well, we're in a range. What if it breaks? What if it doesn't break? What if it breaks down instead of up? That's not what the swing trader do. Okay? That's not what the swing trader do. If you have that many voices in your head, you have not set a bias and you lack conviction as a trader. If you have that many voices in your head, how could you possibly go on TV or stand on a stage and tell people straight face what you think is going to happen? If you're like, well, it could go up, it could go down, it goes sideways, I don't really know. obviously you're missing a piece. Oh, is that right, HK? Yeah. You prefer Greece, huh? Filled with algae? Yeah. All right. I don't know. That's part of the world I don't know well, but I'd like to visit. Years ago, I was invited to speak. It was like, what did they call it? Like the Forex Caucus show or something, expo. And I'd like to go to the Caucasus region too. That's another area I'd like to visit. So sort of like, I don't know, what do you call it? Southeastern Europe would be interesting. And the Caucasus region would be interesting. David says, I know oil has a positive sentiment. All right, let's go back to what I've said, and you need to study this. Stop looking at your chart, by the way. I said it a couple of times in the last probably 5 or 6 sessions. Do your research. Energy Information Agency. Go to the EIA website, find seasonal inventories, aka supply, because you have to have supply and demand, right? Look at the 5-year, right? The 5-year mean plus standard deviations, right? Plus and minus. Find out where we are. Inventory now. Is it above or below the mean? And then lastly, where does the 5-year mean go based on seasonality? Is it projected that supply goes up or down in the next few months? And where are we in actual supply right now relative to the 5 mean trend up, down, or sideways? And are we in the upper quadrant of a down, an upper quadrant of an up, a lower quadrant of the down, or a lower quadrant of the up? And then ponder, what does it mean for now and in the near future of, again, are we above average, below average, and are we historically growing or shrinking? Because we know, so what you end up doing now is fixing demand and analyzing supply. That's called supply side analysis. And then you can then move back and say, what about demand side analysis? Is demand expected to increase, decrease, or stay the same over the next few months or years? And then you can try to combine the two where you get double shifting. Now, double shifting becomes indeterminate, but you can sort of like indeterminate bullishly or indeterminately bearish. But but David says, I know oil has positive sentiment. I don't give a crap about sentiment. Most people are stupid. I'm not, wait. Morena's been training me. She says I need to be positive. People is smart, I think is my new one. So sentiment, I don't care about. So I just look at supply and demand economics. Like, I don't care about the sentiment. I only care about the facts. So give me the facts, Dave, and we'll make some money. Okay? But most people don't think the way I just outlined. They don't even have the capacity. and therefore that's my value creation. But positive sentiment. Oh my God. Oh my God. It's positive sentiment. So, right? I'm not in Georgia, the country. No. Anyways, yeah, so we need more than that, right, David? That's all I'm saying. And if anyone was going to specialize in the energy complex, and then what I'm talking about here is EIA, the Energy Information Agency. So I'm talking about WTI. Really, I'm talking about more than WTI because that's just one type of American oil. So we're isolating supply and demand of American oil. But I'm not just saying, well, demand globally is up, so therefore this is going to go up. That's kind of sentiment, but that's dumb. I mean, it's okay, but we're not in that part of the cycle anymore. That was okay when oil was $5 a barrel. I'm like, dude, obviously underpriced. Okay, obviously oversupply. So, but here's the thing. Now we're closer to fair market value, right, David? It's probably worth somewhere between $65 and $70, between $60 and $70 a barrel, let's say. Okay, great, but that doesn't get you much alpha. So where is the alpha now? How do we become better than sentiment if most sentiment is based on extremely mediocre analysis, maybe even guesswork or hopefulness? So I don't care about sentiment because I'm smarter than that. So if we're going to do this, right, David, I say, okay, well, now our alpha generation is from doing better analysis. Anybody can say oil's worth more than $10 a barrel, so it should go up. Okay, great. But now we're at a price where you need more than sentiment because most sentiment is too basic. So now we do that kind of work, and that's just for WTI. Now we can do some other really cool analysis stuff to really become an expert and say, oil's going to do this from here to, let's say, June 1st. And from June 1st to December 1st, it might do something different. And let me show you, how and why. And you put this together and it's just gooder. Cool. Okay. And of course, you can do like this, like EIA.gov. All your answers are in here. Do you want to know how to trade oil? Spend 2 years reading this website and everything on it and mastering it. Yeah, spend 2 years. And you're like, I don't know much about trading and investing, but I know a lot about American oil, and that's what I do. Okay. Cool, right? Okay. Now we're drilling in. Forecasts, market reviews, right? You could really start understanding where we are and where we could be going. But, right, David? So I know I'm hitting you hard on this. I'm not hitting you hard personally, but this idea of, people think oil is going up or down, I don't care. I don't care what they think. I'd rather you read all this and really get an understanding of where we are and where we're likely to go, because you're going to make most of your money over the next 30 years. You're going to make most, or let's say maybe not most, but let's say a lot of your money is going to come from the sentiment not being fully accurate. Okay? See, the sentiment is up now because it's at $65 a barrel and it went all the way up, and hey, it's gone up, so now it's going to continue to go up. I want you to be the expert to say, well, the sentiment might be generally right, And by the end of the year, they're probably going to be somewhat right. But there's a lot more inside that data where there's so much inaccuracy for the market sentiment that you can really get in. You can pick some meat off the bones. Okay. And so now you're like, okay, well, here's the monthly average of Brent crude compared to WTI. And this is what OPEC said at its announcement. And here's the lower production that's coming here. And then there was this, and then there was that. And then there's inflation expectations and how that ties to the U.S. economy. And here's the monthly average of aggregate WTI. So, you know, are people hedging, not hedging based on open interest? And like, you can really become an expert. And really, I said 2 years. I bet you 2 weeks of studying this, you would become so much better of an energy trader, whether it's WTI, Brent, nat gas, electricity futures. Okay. Okay. Beautiful, right? That's where you're going to earn that. You build your business. It's where you're going to build your business. Okay. Okay. Now imagine things like one day you will start a fund and you will go out and raise money. You'll do a raise. And you're going to have to be unique and compelling. So, is your trading unique and compelling? Do you have an edge? Do you even have a sellable point of view? Do you have a defined, like clearly worded, but actually, let's say, defined in your results, right? Alpha generation. Can you clearly say and show people what you do, what your competitive advantage is? You're like, I do such a deep dive in the EIA and IEA and OPEC websites and through all the major oil producers of the world. You even go to other countries and get their reports translated into English so that you have a world view of energy and supply and demand beyond anybody else. There is nobody better than you. And from that, you can squeeze out 5% more profit with 5% less risk. And that makes you the greatest. And people will just be fascinated. Oh, so you do all this and throw in the word like, I don't know, smart beta and big data. Smart beta, big data. That's what we do. And people will buy it because it'll sound like you have something that people might want to buy. Right? Ultimately, that's what you want to do. Okay? Your trading, your outlook, your behavior, your results, your analysis, your point of view is all going to lead to somebody saying, you know what? I want that. I want David to manage my money. Why would they say that? And the sooner you realize that, the sooner you're going to start creating that. Okay? How do you decide whether to buy a BMW, Audi, or Mercedes? Well, and then did that buyer even look at a Kia? And does a Lexus, right, or Acura consumer even think about looking at Audi? So what I'm saying is somebody has come around and created these really interesting, like consumers even have put themselves into. So here's one of the things you do in business school if you're getting an MBA, right? You create a quadrant of price and quality, and you decide to buy a car. Okay, let me do this a little clearer. Which do you prefer, more quality or higher price? And you'll have different car manufacturers all over the place, right? You can get an Audi. They're really nice and they're expensive, but they break all the time. And you can get a Toyota, high quality and lower price, but then there's something that shifts you around. So, you get a car, like really, if you look at Tesla, it's, you'll find that it's fairly high priced, but actually not very good quality. Actually, I'm surprised because sentiment is they're high quality, but if you look at consumer reports or you talk to anybody that has a Tesla, they love them, but they're always in the shop, right? And I think Audis look great, but they're always in the shop. Okay, and I'm finding like Mercedes is probably over here. This might be a Mercedes. This might be a BMW. Mercedes is a little more expensive than BMW, and they're both pretty decent quality, but some of them are not. Maybe Tesla's over here, not over there, but right. And then a Porsche, I think, is now over here, fairly expensive, but actually quite good quality. I'm quite surprised by it. And isn't Acura just a Honda? And and that's why I said Lexus, is because that's a Toyota. But we find these things in here. Okay? Now, these cars are here and they're perceptual as well. You might say, well, I think Tesla is much better than a Mercedes. A Mercedes is over here, but the Tesla is over there. Okay, perception, whatever. But my other point is, where you are on this chart. On this quadrant. And there's some cars over here, lower price, but pretty decent quality. So you might have a Kia down here. The thing is, a Kia shopper looks here and somebody else looks here and somebody else looks here, but they never consider. So like a Mercedes guy would be better off buying this Kia. And he's like, I'd rather die than drive that Kia. You're like, why? It's better value. It's lower price and better quality. I'd rather die, right? My point here is, as you build your trading career, I want you to think that there's clients out here that have money and they're thinking about investing it. They have some stock traders they know, some bond traders they know, some options traders they know, some cryptocurrency guys they know, some real estate guys they know, some offshore deals they know, all this stuff. And you just might be the energy guy. And he's like, well, that's interesting because all the crypto guys I've met feel like they're full of crap. And all these other guys and I already got too much stock and I already got too much real estate. And I go, so I want to play around with this money or maybe buy a boat. I'm not really sure. And then you show up and you're like, all I do is oil, global oil, domestic oil, global supply and demand. And my alpha generation is doing, big data research using, all of the global information of all kinds of fundamental research so that you can find when market sentiment is a little too bullish, a little too bearish, because they don't understand the bigger picture. They don't understand the seasonality. They don't really truly understand the full macroeconomics. So you might have an oil guy here in the United States that, knows a little bit of that, but doesn't know the big picture. But you and your firm specialize in knowing the entire big picture, and in particular, its impact on currency. And now they look at this and they're like, ooh, that sounds interesting. Okay. Now, but do you understand that they're going to buy it from you? So for those traders listening that just kind of sit down and wing it a whole bunch of trades, and you're just trying to be profitable, and you're trying to be very, very profitable, you're not even understanding where in this segment you fit. Because you're like, I want to build a car, and it's going to be a great car. It might be a fast car. It might be a fuel-efficient car. It might tow a lot. You might have 7 passengers. And they're like, dude, well, if you have 7 passengers, it's not going to be fast. And if you're going to be fast, it's not going to be fuel efficient. Or if it carries 7 passengers, it's not going to be fuel efficient. Unless you're going to do electric. But if and all of a sudden you're just a scatter shot. You're like, I want to build cars. And you're like, but you're not even addressing the individual needs or wants, desires, perceptions, biases of people in the market. You're just building a car and nobody's going to buy it. Because you need to start with, well, what kind of car are you going to build? Who is going to buy it? Who is your customer avatar? Okay, and this is all the crap you go through getting your MBA. So now you need to take that and think like an MBA. If you're going to go to the market and offer some value, a service, or it's even like a product, something that they can buy and consume, invest in, what is it that you want to do is the first thing. The second thing is start doing it. But then third, who is going to invest? And why the hell would they take that risk? Okay. Cash, you have to be able to cross over from what I said to what I'm saying. Okay. You have to understand how to apply this to that. Okay. So anyways, what I just said has nothing to do with cars. I hope you appreciate that. Cool. So, bullish sentiment on oil, poppycock. Okay. Cool. So here it is. If you're a swing trader, you bought it on Sunday and you haven't done anything for days. And you're profitable. Yeah. Well, Jim, I have a feeling Cash did get the point, but yeah. But anyway, so it's just, that's the message. Either received or not received. What can I do? No, I know. Yeah. I know, Cash. No, and I didn't mean to disrespect you, and I don't think you disrespected me. But there was a clear point there. Yeah. Okay. Your trading is designed to be meant for somebody. It's like you will need to specialize or you will die as a professional trader. Because nobody likes a jack of all trades. You have to be special somehow. You need to have a focus, an intent, a clarity, a reason for being, a mission. And if your investor isn't interested in your mission, then they'll go find someone else's mission. But you will very quickly accumulate a clientele of people interested in your mission. You understand? And there might be a lot of people here going, well, what do you mean? Like, I don't want to trade other people's money. I just want to get rich trading Forex. Here's the thing. You're never going to get rich trading Forex if you keep spending your profit. So if you do the math, you'll realize you will have to go, let's say, 10 years, growing your account by 30 to 50% a year, maybe 100% a year, for 10 years without spending the money. And we know that is very unlikely to happen. Because even if you have the patience and discipline and the skills to grow your account like that, you need to pay rent, you need to eat, you're going to go on vacation, you're going to say, you know what, I had such a big year, I want to buy my first Rolex or buy my first Mercedes or something or whatever. And you will draw down the money and you will never get rich. You'll have income, you'll never be wealthy or something, right? It'll never grow because you keep spending it. It's like a drug dealer doing his own drugs and never selling it, right? So how do you get past that conundrum? Well, have a job, but then you're like, well, my job takes up so much time, it eats into my Forex time and capabilities. All right. Well, how about this? What if you could do Forex 7 days a week, 24 hours a day? It's the only thing you do as a profession. Okay. How would you like to do that and pay your rent and buy groceries and have money for medicine, but never touch the money in your trading account so you can grow it from 10,000 into $1 million one day, right? How do you do that? And you're like, well, that's a really good idea, but I don't know how to do that. How can I pay my mortgage or rent, buy food, have money for medicine, and never spend the money in my trading account and have no job? Well, what if your job was trading Forex? What if you were managing other people's money and you provided them, as well as yourself, 30 to 50% growth, and your piece of that compensates you so that you can live? Meanwhile, you're eating that money, your 20% you live on. So in 10 years, you've burned through that 20% a year of the profits that you're being paid, but you've grown your account by 50% a year or whatever it is without touching that, right? So 25 becomes 70, right? 70 becomes 110. 110 becomes 160. 160 becomes 220. 220. And all of a sudden, you're growing this, and 10 years later, you're like, oh, I got $1 million now. Why? Compound interest. So how did you go 10 years without spending your money? You earned it by value creation. Okay. Okay. Yeah. Okay. And hopefully that's for somebody is an aha moment. So like, oh my God, I need to get there. Well, you can't realize it 3 years into your trading career and you're like, well, I got 3 profitable years in a row trading Forex. And then you realize you don't have a product that anybody wants to invest in. People look at your trading and you're like, man, okay, you're profitable, but this is kind of all over the place. What's going to happen next year? And you're like, I don't know. Okay. Well, I'm going to be profitable next year. How? Why? Well, because I always am. It doesn't sell. You understand? So now I want you to think that you have to do sales and marketing. What? So you have to have a successful Forex trading business, meaning you must trade profitably. But what's the next stage? You have to go out and sell. Sales, marketing. Okay? Kiss some hands and shake some babies. So what's your pitch? I don't specialize in anything. Invest in me. That's what you're going to say on the stage. Anything and everything is open. Okay? You know it's not going to work. You just know it. I know you know. And I know you know that I know that you know, which makes it common sense. So when will you start? Right? So this goes all the way back to David. Thank you, David, by the way. Market sentiment is where you're going to make your money. not trading it, but understanding when it's right and wrong and the gaps in between. It's like when I take you through the day trading course, the first thing I tell you is you make your money inside the wicks. And it's like, it's an eye opener. You're like, oh my God. Oh my God. Oh my God. Right? Like, oh, I never thought about it that way. But it's so true. And it, right? That third eye opens right here, huh? Your third eye opens. Oh. Okay. Coolio. So I was going to do all this stuff, right? It's interesting. People get caught up in this, and then you're like, nothing's really happening. But all right. Here's the thing. If you're a bear, yeah, all this is quite easy. Okay? Because you should clearly see this stuff. Okay? And you're going to stay bearish if you're a bear until this stops. So what you're thinking is generally like this. So all fairly easy. Okay? Now the question for a bear is going to be, you keep doing this until it stops working. But what about a bull? A bull is waiting for the same thing. And this is another aha moment for a lot of people where they realize bulls and bears are not actually battling each other. They're waiting for their turn. So bears are like, I mean, look, if you sell this, you're like, it should fall. This is your logic. Okay? And then it kind of goes down a little bit, and then it makes another lower high, and you're like, it should continue. It should continue. It should continue. It hasn't made a higher high yet. It should continue. Okay? Hasn't made a higher. Oh, lower low. Good. So you can probably add another one. And you don't know about each and every one of these little moves. Every time you're not sure. Every time you're not sure. Now, you're right. You're a bear, so you have whatever conviction here, but you're never quite sure. So you keep doing it until it fails. Now, we have tools like pivot points and stuff that may help you determine like you could say, if you hit this and it comes up, well, that's a central. And you might say, well, that's where bulls might enter. Or you might say, well, we'll get to 86, but I don't want to sell after 86. So you exit and you don't add one more. And therefore you don't have the eventual loss. But what each trade, you don't actually know. So you're like, well, I'll keep doing this until it stops working. But you also have to understand there's a bull somewhere saying, I'm going to let it fall until it stops falling. And at the point it gets somewhere like 86-ish, especially with that central pivot there, you're going to look for like maybe an inverse head and shoulders, a 1, 2, 3, but you might start looking for this. And you're not going to buy it on one. By the way, this isn't a 1, 2, 3 or an ABC, so I don't know. You're not going to buy it here. I don't know what to call it. You don't want to buy it here. This might be too much confluence. You might buy it here, but you definitely are going to buy it here. So you don't like it at 85.80. You might buy it at breach of 86 and pull back to 86. But you probably end up buying it a pullback at 86.50. So let's say 85.85. No. 86 after. How about this? 86 if it is equal to support, which means now you have to be higher than 86 for a while, okay? Or 86.50, okay? So no, yes, and yes. Richard says, I'm a good strategist. Yeah, but the best thing about me, Richard, is I'm good looking, I'm smart, and I'm unbelievably modest. Modesty is probably my best asset. I've even trained my kids on stuff like that. My kids are teenagers, but I'm preparing them for their first job interviews. Like, please tell us, some of the personal things, please explain to us your some things you're doing to improve as a person. Well, I'm an overachiever by nature, and I may be too loyal. I tend to please people too much. I try to do too much. I'm too focused on my work. My kids are teenagers and they already know how to get through this, right? I'm an overachiever to a fault. So I'm trying to find more balance in my personal life. And it's an ongoing challenge. I try to find peace through yoga, but inevitably my mind drifts back to high performance in my career. So, yeah. The fine art of bullshit. So anyways, let's move on. I want to do a couple of these things. Let's get on here. Okay. Market sentiment. Okay, and you can say, don't care. Wow, I thought I killed that. Delete. There we go. Cool. Okay. Now, what does this chart tell me? You're going to get, if I asked you at a conference, you're going to get different answers, which is fine by me. Okay, we could have it maybe even like this. Not sure why I had it like that, but whatever. You can do it like that. You can not do this. You can have pivot points. You can not have pivot points. Couple of things. Price and time is the correctest answer, but it doesn't tell us about the market. So let's talk about this a little bit. So market sentiment is bullish, which is fine. Right, Davey? This moving average, for example, let me delete this one. Nope. Okay. There's a couple of things. Price is quite far from the fair market value. Okay? That's one thing. And that doesn't make it bearish. It just means it makes it unbelievably bullish. Okay? And then something odd happens. Just out of the blue, 100% retracement. Sort of like this one. This was down, and then we get 100% retracement. No longer technically down. So is this possibly no longer technically up? Maybe. And now we need to worry about that. You either understand why it occurred, and that's why you end up using market tools like pivot points, for example. But what does it just mean with this? If the fair market value is 54, maybe 55, and we're at 64 or 65, and it's been on a tear from 36 to 66, what's going on? What is the story with this pullback? 100% retracement, finding support at 55. It tells me this. Is it going to do that? No. That's not what it's saying. But it's saying it's extremely overbought and has slowed down significantly. Many of the market participants may not be participating, maybe even shifting teams. They're going from bulls to bears or something. But at the very least, it doesn't say down. What it's saying is the probability of a double top has increased significantly. Despite market sentiment all being up. Okay. Well, market sentiment is not the full story, is it? Here's a question. What do the alliance of China, Russia, and China and North Korea, this political, economic, situation, how is it going to affect currencies? Name the most important thing that impacts the value of a currency. There's two answers that you could probably give me that I would accept. But give me one. What is the most important thing that you watch to judge current and future value of a currency? Is it political international economics? Is it inflation? So I'll go with the first one, monetary policy. Okay, that's good. Give me the next one. I mean a specific tool, a specific thing you look at. Interest rates, which is monetary policy, okay, not GDP. It's a component of GDP, but GDP only tells you the productivity of a country. You could have a productive country that doesn't trade, for example. There's two ways to change the value of a currency. Increase or decrease its supply, or increase or decrease its demand. Money supply is quite literally the money supply. Supply of money, money supply. Monetary policy of the central bank. The second one is demand. What is demand? Are you buying iron ore from Australia? Yes or no? Are other countries around the world buying iron ore and coal from Australia? Yes or no? Is Australia exporting iron ore and coal? Yes or no? Those are the only two things that matter. Inflation, don't give a dang. Now, it'll impact the monetary policy, and we care about monetary policy. See, you might say, well, what about jobs? Don't give a damn about jobs. What about inflation? Don't give a damn about inflation. What about productivity? Don't give a damn about productivity. These are all subcomponents that lead up to a change in monetary policy to deal with inflation, to deal with joblessness, to deal with other components. But what do we actually care about? PPI? I don't care about PPI. Retail sales? I don't really care about retail sales unless it means America's going to import more products to sell. That's what I care about. Okay? So we go back to well, what about an alliance between Korea and China? Is that going to change everything? Is the world over now? Or is the world going to double in productivity? Or, right? Well, how's it going to impact import exports? Okay. So the more interesting question is, in the next 12 months, will Americans buy Samsung TVs and phones, LG fridges, okay, Kia and Hyundai cars, if the answer is yes, the dollar weakens and the Korean won goes up in value. One is an importer, one is an exporter. Enough said. Okay? Enough said. Okay? Follow the money, yo. If that's what we do, then what do you do to follow the money? Do you specialize in oil? And does oil have some relationship with global macroeconomics in general? Then you're a risk on, risk off generalist, but with the supply and demand of a physical commodity specialist. Right? You specialize in the supply and demand of, let's say, WTI in the subsector of macroeconomics. So the answer is supply and demand. I wouldn't say it that way, pure mathematics, but I'm not. I wouldn't say it that way, but I'm not saying it's wrong. But it doesn't seem like. I mean, I guess that when you look at it that way, it's sort of, to me, anyways, personally, it's sort of meaningless. Like supply and demand. Like I use that language when it comes to finding price and time, right? But when I'm doing import-export data, yeah, like, is South Korea going to continue making cars, TVs, and refrigerators? Are they going to supply us? I'm going to say yes. Now, if South Korea in particular goes into another COVID situation, they have to lock down the economy, that would impact supply. But those are very rare exogenous shocks. And if it is indeed happening, maybe we, like with COVID, maybe we can include that. But I think we're beyond that now because we're looking at next year. And so then the other side of that would be like demand. Are Americans going to demand that? But see, like, but I'm much more interested in fiscal and monetary policy and business cycles, and the monetary policy, because typically it's only monetary, not fiscal, right? But because we get the fiscal spending inside of GDP, so I kind of exclude that in a normal basis. So it's more like, what does the current business cycle tell us about current and future expected consumption? Okay. It's not really, I can see it like, and then you're converting that into demand. But I'd like to be more specific than that. It's so general. So I'd rather say, monetary policy, business cycle. That's why we look at things like job and employment, household wealth effect, and right. So it's like, yes, but I feel like if I was a college professor, I'd say, okay, yeah, that's not wrong, but it's not right enough, right? So I might say, well, you get 1 out of 3 points, but I wanted you to say more, kind of thing. So that's all, if that makes sense. So hopefully I'm having a positive impact on the way that you think about currency trading and about being a professional currency trader. Okay. Was it last week we talked about, portfolio construction? Now we're talking about portfolio specialization and correlation and even sales and marketing. Like I hope you're pulling all these different perspectives together as you seek to learn how to use a moving average, as you seek to learn how to buy at support and sell at resistance. Okay? But if you remember how I started this webinar, you're starting at a point beyond probably the fundamentals. Not even like fundamentals like supply and demand globally, but like you're not even, it might not be you specifically, but let's just say many people here, especially if they're newer, they don't even start with the concept of strong versus weak. And then I throw my hands up in the air and like, well, how am I going to get you to spend hours on the EIA website doing research when you're not even pairing up strong versus weak? I'm like, oh, we have so far to go, so much to learn. I want to show you so much. And then how are you going to go out and raise $5 million? You're like, well, I made a lot of money trading Forex. And you're like, oh my God, you don't understand the industry, right? Like there's such a journey to go here. So I think it would be easy just to show you how, throw some trades in, woo. But I hope I give you true, real value. And that's now you know that what you need to know, or let's say now you know what you don't know. And if people would have just told me what I didn't know in the beginning, it wouldn't have been so difficult and hard and challenging. It was desperately challenging for me in the beginning, right? So now I'm sharing so that you have sort of the foresight to say, you know what you're doing now, you have a glimpse of how you can improve, but you also are starting to see the big picture. And the big picture will likely change your behavior in ways that end up being positive in your day-to-day trading. Thank you for being part of the community. Please like, please subscribe, please leave comments on the recording, and please visit tradersway.com and open up a demo account and just give them the opportunity to earn your loyalty and respect. Thank you for being part of my team. I'll see you tomorrow. Cheers.